Hello everyone. Today I'll be taking up with multiple choice questions of second year BCom corporate accounting subject SEM 4 semester 4. Friends, students, आप लोगों के एग्जाम में 30 MCQs आएंगे and it is expected that in corporate accounting subject 50-50% weightage रहेगा. मतलब around 14 to 15 questions will be based on calculations where you have to do some rough calculations, make maybe some formats required, etc. Conceptual knowledge will be required. And around 14 to 15 questions, 50% weightage you can expect full theory. मतलब proper theoretical questions ही आएंगे. तो वो 15 क्वेश्चंस जो आपके प्रैक्टिकल आएंगे उसे मैं आज के सेशन में कवर करने वाला हूं. आई एम गोइंग टू कवर दोस 15 क्वेश्चंस. There are around 23 to 24 varieties possible and I can guarantee you कि ये वीडियो में जो भी क्वेश्चंस आप देखेंगे 23-24 डिफरेंट वेराइटीज कवर्ड, वो आप एक दो बार अच्छे से प्रैक्टिस करके जाएंगे तो वो 15 मार्क्स पूरे के पूरे आपके पॉकेट में है. थियरेटिकल बेस्ड क्वेश्चंस का कोई भी वीडियो लेक्चर वगैरह जरूरी नहीं है क्योंकि उसके आंसर्स ऑलरेडी एमसीक्यू फॉर्म में दिए हुए हैं. यहां ऊपर में लिंक है, यहां से आप मटेरियल डाउनलोड कर लीजिए एंड एक मटेरियल का समरी बनाया हुआ है विच यू कैन सी एट द बैक साइड ऑफ मी. आप पीछे देख रहे हैं एक समरी बनी हुई है. दैट समरी पीडीएफ इज ऑल्सो अवेलेबल इन दिस पर्टिकुलर यू विल लर्न ऐप. वहां से आप मटेरियल और समरी दोनों डाउनलोड कर लो एंड देन वॉट एवर आर द रिपीटेटिव क्वेश्चंस यू टू प्रैक्टिस ऑन योर ओन. I'll be taking up with around 23 different variety of questions in this video session and वही 23 के 15 to 20 repetitive questions है that you do self practice to gain confidence for the same. And कहीं पे भी कोई दिक्कत है तो मेरा कॉन्टैक्ट नंबर नीचे दिया हुआ है, उस पे आप क्लिक करके मुझे you can get in touch with me. I'll try to reply as far as possible. So let's start today's video for practical questions on corporate accounting MCQs. Let's start. So you all can see in front of you, this is the kind of table which will be available. This PDF of this entire table, see these are the 23 variety of questions. So the PDF of this table is available in our You Will Learn app. उसका link दिया हुआ है, description में भी दिया हुआ है, ऊपर भी दिया हुआ है. You can click on that link and download this PDF. This summary table is available of 23 variety of questions. And whichever years of various exams these questions have been repeated, those similar questions you practice on your own. Wherever you see blue highlighted is done, blue highlight is done, those questions I am going to solve in today's session, and then non-highlighted ones you are going to try on your own. So let's start. Very first question is based on how to find profits before exceptional, extraordinary items and tax. How to find this? It is Unit 1 Company Final Accounts based question, and first question of 2023 was asked over here. So let's take up with this. This is 2023's first question. Look at it. K Limited has total revenue of 157,320 and total expenditure of 117,320, including expense of factory closure cost 10,000. Now, including expense of factory closure cost, you ignore it. This is to be ignored because whatever tax we find on the profits after considering factory closure cost. It is an extraordinary item. Including that, we find the tax. So that has to be included in the expenses. The company provides for tax at the rate of 26%. Calculate the amount of profit before. Okay, what is asked is profit before exceptional and extraordinary item and tax. Now, how will we find this? Understand this. Very first of all, over here we'll start with total revenue, which is 157,320. Okay, total revenue 157,320. From that we will minus total expenditure. Now, here we cannot ignore this reason. Normally, if you have to find the tax, you'll ignore it. But over here, you have to find profit before exceptional and extraordinary items and tax. And factory closure cost is an exceptional and extraordinary item. So we will minus expenses excluding the factory closure cost. So we will minus 117,320 minus factory closure cost 10,000, means excluding factory closure cost, we will minus 107. Okay, excluding that will minus 107,320. So this is excluding factory closure cost, and what we will get is 50,000. What is this 50,000? The answer what we require: profit before exceptional and extraordinary item and tax. Okay, I hope everyone is clear with this. Now there is no similar question asked in exams so far. There is a one and only question asked in last year's exams, but it is very simple. If you have done company final accounts thoroughly well, so whether they ask you profit before exceptional item, profit before extraordinary item, profit after tax, before tax, you must be able to answer it. Okay, going further, second is goodwill on acquisition. Now goodwill on acquisition means when you buy a new business, when you take over a new business, how do you find goodwill? So 2023's question number 3, look at it. This is 2023 question number 3. Adani Limited acquired Boat Limited with purchase consideration of 15,50,000 and the amount of net assets taken over is 13,80,000. Calculate the amount of goodwill paid by Adani Limited. Now, if you are paying more, it is goodwill. If you are paying less, it is capital reserve. Over here, purchase consideration is 15,50,000 and the net assets which we are getting against that is 13,80,000. So are we paying more or less? We are paying more. How much more are we paying? We are paying 1,70,000 more. That is goodwill. We are paying more for the reputation of the company, so that is goodwill. So you all can see option C, 1,70,000 is your answer. Now this is again one and only question asked in exams, goodwill at the time of acquisition of business. So if a similar question comes, you actually don't require extra practice. It is a very simple one, basic one. Now tax payable or refund, there are 4 questions asked in 4 different exams repeated. So we will be doing 2 out of that. 2020's question number 17 and 2017's question number 27. These 2 questions will cover all the aspects of tax payable and refund calculation. And then 2018's question number 30 and 2023's question 7 you all will try on your own. That's why I said to you, आप लोग ये PDF download कर लो summary का. So and you'll also get the PDF of the MCQs over there. So in the same MCQ you solve 2018's question 30 and 23's question 7 on your own. Right now let us look at question 17 of 2020. Okay. Question number 27. Yeah, 27, not 17. Okay, 2017's question number 27. 2017's question number 27. Advance income tax paid is 2 lakhs for the assessment year 16 to 17. Provision for income tax for the year ended 31/3/16 is rupees 1,80,000. Gross tax liability for the year 15 to 16 is 1,90,000. Now you are asked to calculate tax payable or refund and shortfall or surplus of income tax provision for the assessment year 16 to 17. Now the concept is very simple. What you are supposed to do is to find tax payable or refund, compare advance tax with gross tax liability. Compare advance tax with gross tax liability. Okay. So if you see here advance tax, it is 2 lakhs. Compare that with gross tax liability, that is 1,90,000. Now, advance tax means we have paid tax. How much tax did we pay? 2 lakh. But liability is only 1,90,000. Did we pay more or less? We have paid more. How much more we have paid? 10,000. We have paid more means we are going to get refund of rupees 10,000. If you pay less, the amount is still payable. So here we have tax refund of 10,000. Now to find this shortfall or surplus, we need to compare provision for tax with gross tax liability. Okay, provision for tax with gross tax liability. So first, provision for tax. You all can see it is 1,80,000. That you have to compare with this one, gross tax liability, which is again 1,90,000. Now, did we provide more or less over here? 1,80,000. Did we provide more or less? We have provided less. How much less we have provided? 10,000. Less means shortfall. If we have provided more, then there is surplus. Here we have provided less, means there is shortfall of 10,000. So your option C is the correct answer. There will be tax refund of 10,000 and shortfall of provision of rupees 10,000. One more similar question will be doing question 17 of 2020 exams. Okay. Here we had got tax refund. So hopefully now there is tax payable. So both the concepts will become clear. And there can be surplus also. If provision for tax is more than the gross tax liability, then there is surplus. Okay. Let's see here. Gross tax liability of 2018-19 amounted to 2 lakhs and no effect for the same has so far been given in accounts. Advance tax paid 17 to 18 is 1,40,000. Let's do the comparison. What is advance tax paid? 1,40,000. What is gross tax liability? 2 lakhs. Now, did we pay more or less? 1,40,000 only we paid. We paid less. How much less did we pay? 60,000. That is tax payable. We paid less. We still have to pay that amount. So that is tax payable. Okay. So similar other questions you all will try on your own. Which other questions similar you all will try on your own? 2018's question 30 and 2023's question 7. If you have downloaded the MCQ material from that 2018's question 30 and 23's question number 7, you all try on your own. Now next is based on normal profit 2023's question number 8. Look at it. 2023's question number 8. If average trading capital employed is 28,74,850 and the market rate of interest on investment is 8% and rate of risk return on capital employed is 2%, calculate normal profit. Okay. Now, very first of all, what is normal profit equal to? Capital employed into normal rate of return. And what is normal rate of return? The normal rate of return will be equal to this 8% plus 2%, 10%. Okay. Market rate of interest plus our business has a risk, and that our investors, because of that risk, expect extra return of 2%. So from our business, investors will expect a return of 10%. That is normal rate of return. Now capital employed is given to you 28,74,850. So normal profit will be equal to capital employed 28,74,850 multiplied by normal rate of return 10%. That is 2,87,485. That is option C. Okay. So similar also, no other question has been asked in exams based on normal profit. So it is very simple. If it comes, you must be able to answer. Now average profit based goodwill. Goodwill on the basis of average profits method. Simple or weighted average profits method. So 2023's question 9 blue highlighted when I am doing it. And 2017's question 3 you all try on your own. Okay. You can download the PDF and do that. So look at question 9 of 2023 first. Goodwill is to be calculated at 1.5 year. 1.5 years purchase of average profits of last 3 years. Now for average profits, we have to see if trend of increase or decrease in profit is visible, we will apply weighted average method. If no such trend is visible, we will apply simple average method. Let's see. The firm earned profits during the 3 years 12,000, 5,000, 7,000, 12,000, 5,000, 7,000. No trend is visible. Profit is decreasing, then increasing. So simple average will be applied. The amount of goodwill will be, first we find average profits. Let's do that. Average profits will be equal to 12,000 plus 5,000 plus 7,000 divided by, okay, 12,000 plus 5, 17,000 plus 7, 24,000 divided by 3, that is 8,000. Right? Average profits are 8,000 and 1.5 times of that. So goodwill will be equal to 8,000 into 1.5 years purchase. That is 12,000. So answer will be option B, that is 12,000. I hope everyone is clear with that. Okay. Now similar, which question you all will try on your own? Question number 3 of 2017 you all will try on your own. Now super profit based goodwill, you all can see 2 questions are asked in 2017, 2 in 2018. 2 in 2019, 2 in 2023. And you can expect 2 questions of super profit in 2024 also. So minimum 2 questions you all can easily expect from super profits method. Again, I'm going to solve 2 questions over here. 2017's 24th highlighted in blue and 2019's 6th question. These are the bit complicated ones. The other are simple ones. So complicated ones I am doing right now. Then other questions 16, 17, 19, 8, 10, 30. So 1, 2, 3, 4, 5, 6. 6 questions you all will try on your own. Let us see 2017's question 24 and 19's question question number 6. First 2019's question number 6 and then we'll solve 2017's question number 24. Look at it. If opening capital employed is 18,75,000, closing capital employed is 23,75,000. Now opening and closing capital employed is given, so we will find average capital employed using this information. Opening plus closing divide by 2. Average future maintainable profits means our business profits are 3,75,000 including loss due to fire 50,000. Now loss due to fire is an abnormal loss. It is not going to occur every year, so we have to remove that. If you exclude that loss, the profits will increase. So this 50,000 we will add. Okay, this 50,000 we will add in the profits. Why we will add? If you remove the loss, the profits will increase. Loss is not expected every year. It is an abnormal situation. So abnormal loss, if we remove the profits, will increase. We will plus 50,000 in these profits. Now normal rate of return is given as 15% and super profit can be maintained for 3 years. So 3 years purchase is to be done. What is the amount of goodwill? Now very first we find average capital employed. So average capital employed will be equal to 18,75,000 opening capital employed plus 23,75,000 closing capital employed divided by 2. Now 23 plus 18, 41, 42,50,000 divided by 2, 21,25,000. Average capital employed comes to 21,25,000. Now normal rate of return is 15%. So normal profits will be equal to 21,25,000 capital employed multiplied by normal rate of return, that is 15%. Okay, so 21,25,000 into 15%, that will come to 318,750. Okay, now this is normal profit. Super profits will be equal to our profits, average future maintainable profits minus normal profits, what everyone else is earning. Now our profits 3,75,000 and we discussed we have to add this 50,000. So it will become 4,25,000. Okay, I repeat, abnormal loss we will add back. So our profits excluding the loss, what we expect every year will be 4,25,000. From that we'll subtract normal profit 318,750. So 4,25,000 minus 318,750, that will be equal to 106,250. Okay, 106,250. And then goodwill will be equal to super profits into number of years purchase. That is 106,250 into, over here in the question you all can see 3 years purchase is given. So into 3. 106,250 into 3, 318,750. That is the value of goodwill. So that is which option? That is option number C, 318,750. So I hope everyone is clear with this. One more question of 2017 will be solving question number 24, because here profits average calculation is also to be done again. So let's see that. And then you try remaining questions on your own. The profits of ABC Limited for the past 4 years are 12 to 13, 1,60,000, 14 to 15, 1,48,500, 13 to 14. And then 14 to 15, 2,11,000, 15 to 16, 1,78,500. The profits included non-recurring profits on an average basis 14,500. So what we will do is, from average profits, we will remove this non-recurring profits. Now, just now what did we do? When we removed the loss, we did plus. When we removed the loss, we did plus. Now here, if you remove the profits, non-recurring profits, non-recurring means you're not going to earn them every year. If you remove those profits, your profits will decrease. So here this 14,500 we will minus from the average profits. Okay, this 14,500 we will minus from the average profits. Now capital employed is 12 lakhs. Normal rate of return is 11%. Goodwill is valued at 4 years purchase of super profits. Let us first find the average profit. So the previous question, average profit was directly given. Here average profits we have to first find. So average profits will be equal to 1,60,000 plus 1,48,500 plus 2,11,000 plus 1,78,500 divided by 4. Okay, so 1,60,000 plus 1,48,500 plus 2,11,000 plus 1,78,500, that is 6,98,000 divided by 4. So that is equal to 1,74,500. These are average profits. Now the steps are same as we did earlier. Capital employed is directly given. Normal rate of return is directly given. So normal profits will be equal to capital employed into normal rate of return. That is 12 lakh is capital employed multiplied by normal rate of return 11%. So 1,32,000. Then super profits will be equal to our profits. Okay, from this profits we have to minus, what did we discuss, this amount, non-recurring profits of 14,500, that we have to minus 14,500 on average basis. Okay, non-recurring profits. If you subtract 14,500 from 174,500, we'll get 1,60,000. So 1,60,000 is the average profits what we have to take into consideration. Okay. So here super profits will be average future maintainable profits, our business profits minus normal profits, other business profits. So we are earning 1,60,000 minus what others are earning is 1,32,000 with the same investment. How much more we are earning? 1,60,000 minus 1,32,000, 28,000. That is our super profit. Now goodwill will be equal to super profits into number of years purchase. So 28,000 multiplied by how many years purchase? All of you can see here 4 years purchase is given in the question. Okay, so 28,000 into 4, that is equal to 1,12,000. So goodwill is 1,12,000. That is what is asked. Super profit is 28,000 we obtained over here, and goodwill is 1,12,000 we obtained over here. So option A. Okay, so 2 questions based on this we have already done. Means these 2 questions, now 6 questions rather, you must be able to try on your own with 6. 2017's question 16, 2018's question 17 and 19, 2019's question 8, and 2023 question 10 and 30. So 6 questions you all practice on your own, and my number is given here 9998010202. Any of the answers given in our PDF, if you are not able to get, feel free to contact me. I'll be more than happy to solve your doubts. Okay, let's proceed further. 7th question, change in stock or inventories. This is company final accounts question. 2 questions are asked in exams. We will be solving 2023's question 13. The other one you all will try on your own. Look at 2023 question number 13. Okay, see that. What will be the amount of change in inventories of finished goods recorded in statement of profit and loss in the following situation? Raw material at cost. Now we are asked change in inventories of what? Finished goods. So you all ignore this raw materials. To confuse you, this information is given. Okay, Ignore the raw material at cost, that has no relevance. Now, finished goods at 1/4/22, opening stock, closing stock of finished goods 31st March 23, that is 5,70,000. Now, how do you find change in inventories? Change in inventories is equal to opening stock minus closing stock. What do we take in P&L statement is opening stock of finished goods minus closing stock of finished goods. If it is positive, we report positive amount in expense. If it is negative, we report negative amount. Here opening is 3,20,000. Information 2 you all can see here. And closing is 5,70,000. 320 minus 570 will be equal to minus 2,50,000. I'm writing in bracket. Minus 2,50,000. So option A is your answer. Okay. So similar, one more question has been asked in exams. You all will solve this. Okay, I've taken 13. So 2018's question 24 you all try on your own. Now short-term borrowings is asked in 2023. 14 single question only is asked. It is a basic one based on the format of company final accounts. So other than short-term borrowings, they can ask you anything else. They can ask you long-term borrowings. They can ask you trade payables. They can ask you trade receivables, cash and cash equivalents, tangible fixed assets, intangible fixed assets, non-current investments. Any of the notes of company finals can be asked. Look at it. Calculate short-term borrowings for period from the information given below. Now, cash credit is a part of short-term borrowing, 14,500. Advances from customers is also a part of short-term borrowing, 60,000. Debentures is a part of long-term borrowing, so that will not be included. Okay, so what will be included in short-term borrowings will be cash credit of 14,500 plus advance from customers 60,000, 74,500. Option A. So as I said, other than short-term borrowings, any other notes, shareholders funds also, reserves and surplus also, long-term borrowings, any other notes they can ask you in exams. Okay, you prepare the format of company final accounts thoroughly well. They'll give you extra information also which is supposed to be ignored when you solve such questions. Now, ninth type of question is based on calculation of average future maintainable profits. 4 questions have been asked in past exams. 2 I am solving and 2 you will try on your own. So first we take up with 2023's question number 15. 2023 question number 15. Look at it. ABC Private Limited has super profits of 20,000. Now this is a reverse question. You have to find average future maintainable profits, but answer is given and the first, you can say last step is given, first step is to be obtained. Normal profits, calculate the average future maintainable profits. Now, first of all, you all tell me, what is the formula of super profit? Average future maintainable profits minus normal profits. Okay. Now, you bring average future maintainable profits on the left side, super profits, rather, bring normal profits on the left side. So, can I say that super profits minus on the left will become plus? Normal profits will be equal to average future maintainable profits. Okay. So what will average future maintainable profits be equal to? Super profits, that is 20,000 plus normal profits, that is 50,000. So 20 plus 50, it will be equal to 70,000. Option B. So in this type of questions, they can ask you more complicated also. Goodwill answer given. From goodwill, you apply the last step. First, number of years purchase will be given. You obtain super profits. Then you apply super profits formula as I did right now. And then you find average future maintainable profits. So more complications can also be involved. If you're clear with all the steps, then you can go reverse and find those things. Capital employed can also be asked. So from super profits, you get average profits. Then once you get average profits, capital employed, normal, or maybe average profit is given, find normal profit. Then from normal profits formula, find capital employed. Those reverse questions are possible in exams. Okay. Now, one more question we will solve of average future maintainable profits, that is asked in which exams? 2019 exams. Okay. So all of you look at 2019's question number 9. See that? Now this is pure calculation of average future maintainable profits, direct method, directly what the information is given. The profits of the companies during the past 3 years are given below. 15 to 16 is 3 lakhs, including 30,000 of non-recurring income. Non-recurring income, if you remove income, profit will decrease. So we will minus this amount. 3,50,000 is including loss of 50,000 on sale of machinery. Now, loss is abnormal here. Sale of machine doesn't take place every year. If you remove the loss, profits will increase. So this amount we will plus. And 4 lakh includes again speculative profit of 50,000. Speculative profit we don't earn every year. If you remove this profit, profit will decrease. So we will minus. First, we will find adjusted profits using this information. Then if there is a trend visible, we'll apply weighted average. No trend, then we'll apply simple average. Let's do that. Okay. First, years. Then profits. Then plus what we have to do, minus what we have to do, and adjusted profits. Once we get adjusted profits, we'll decide should we do simple average or weighted average. So 2015 to 16, the profit is 3 lakh rupees. Now here we have to minus non-recurring income of 30,000. So 3 lakh minus 30,000, average profit will be 2,70,000. Then 2016 to 17, the profit is 3,50,000. Here we have to add the loss of 50,000. So 3,50,000 plus 50,000, 4 lakh will be the adjusted profit. And then 2017 to 18, the profit is 4 lakhs. From that, we have to remove the speculative profit 50,000, so profit will decrease. So 4 lakh minus 50,000, 3,50,000. Now look at the profits, everyone. 2,70,000, 4 lakhs, 3,50,000. Is any trend visible? No. 2,70,000, 4 lakhs increasing, 3,50,000 decreasing. So we will apply simple average method. First, we'll do total of these profits. 2,70,000 plus 4 lakhs plus 3,50,000, that comes to 10,20,000. These are the total adjusted profits. So average profits will be equal to 10,20,000 divided by 3 years. Okay, that will be equal to 3,40,000. Now average profits are obtained and they themselves are future maintainable profits. So this itself is average future maintainable profits. Option A, 3,40,000 is our answer. Okay, so you all can try similar questions on your own, which all based on average future maintainable profits. Look at 2017's paper and try question 1 and 11 on your own. Now, capitalization of super profits or profits goodwill. Okay, let me tell you one thing here. There are two different methods of capitalization. One is capitalization of average profits method. The other is capitalization of super profits method. Answer of both the methods are always same. Answers of both the methods are always same. So you remember any one method only. Better is capitalization of super profits method. Whichever method is asked in exams, you apply the formula of capitalization of super profits in MCQ, your answer will come correct only. Okay. So here again you all can see I am going to solve two questions, 18 of 2023 and 29 of 2018, and then remaining 1, 2, 3, 4, 5 questions you all will try on your own. So look at 2023's question number 18. Find out the value of goodwill as per capitalization of super profits method. And here, even if super profit was not mentioned, we would apply the same steps. Answer would come same. From the following information. Actual capital employed 6,96,000, normal rate of return 13%, average future maintainable profits 1,65,000. Now the formula of capitalization method is super profits upon normal rate of return into 100. So first we need super profits. Okay. Let's first find normal profits. Normal profits will be equal to capital employed 6,96,000 into normal rate of return 13%. 6,96,000 into 13%. So 90480. Now our average future maintainable profits are already given. So super profits will be average future maintainable profits minus normal profits. Average future maintainable profits are 1,65,000 minus normal profits are, we obtained 90480. So 1,65,000 minus 90480 is 74520. Okay. Now formula of goodwill is super profits upon normal rate of return into 100. So 74520 upon, what is normal rate of return given in the question? 13% into 100. That comes to 74520 divided by 13 or percent or into 100. 573,230.76. So we'll round it off to 231. Option A. Okay. So as I said, whether they ask you super profits capitalization or normal profits capitalization, your answer is going to remain same. Let's solve one more question. Which one is covered? We are going to solve in the class 2018's question 29. Look at 2018's question 29. Different years are given, net profits are given. So like we did in the previous question, average of all the years will have to be done. Okay. Average of all the years will have to be done. Average trading capital employed in the business is 6,50,000. Now, capital employed or average capital employed, any of the information is given to you, you take that as capital employed in the question. If opening and closing are given, you find the average. If directly closing capital employed is given, no other information is given, you take closing capital employed in calculation. Okay. Market rate of interest 8%, rate of risk of business return is 2%. So this we have done in earlier question also. Normal rate of return will be 8% plus 2%, 10%. Normal rate of return, what we will use is 10%. From the above particulars, calculate goodwill, compute goodwill by capitalization of super profits method. First, we'll have to do average profits. Look at the profits. 60,000, 63,750, 69,000, 78,000, 88,500. Is it showing an increasing trend or not? Yes. 60, 63,750, 69,000, 78,000, 88,500. We will use which method? Simple or weighted? Weighted average method. Let's first find profits by weighted average method. Years, profits, weights, weighted profits. Okay. Years 12 to 13, 13 to 14, 14 to 15, 15 to 16, 16 to 17. Profits 60,000, 63,750 increasing, 69,000 increasing, 78,000 increasing, 88,500 increasing. How will we use the weights? 1, 2, 3, 4, 5. Now, 60,000 into 1, 60,000. 63,750 into 2, 1,27,500. 69,000 into 3, 2,07,000. 78,000 into 4, 3,12,000. 88,500 into 5, 442, 500. Okay, here in exams you can save upon the time by using the memory functions. So whatever you are doing, this 12 to 13, 60,000 into 1. After that you press M plus. What will you press after that? आप इसके बाद में M plus calculator में press करो तो memory में record हो जाएगा. Okay. So this is what you can do. 60,000 into 1, then press M plus. Then 63750 into 2, then you again press M plus. Then 69,000 into 3, again you press M plus. 78,000 into 4, again you press M plus. 88,500 into 5, again you press M plus. And last में आप लोग जो है ना MRC को press करो, memory recall and cancel. तो आपको total मिल जाएगा, which is 1149,000. This will save a lot of your time in exams using the memory functions. But before you put this memory, before you insert this memory in the calculator, press MRC 2-3 times, because MRC mein MR is memory recall and MC is memory cancel. So you press MRC 2-3 times, so any old memory in the calculator will get cancelled. And you press on also 2-3 times, so old memory will get cancelled. Then only you feed the new memory in the calculator. This will save upon a lot of your time in exams. Then total of weights 1, 3, 6, 10, 15. Now average profits by weighted average method will be equal to total weighted profits 11,49,000 divided by total weights 15. Okay, this 11,49,000 divided by 15. So what will we get? 11,49,000 divided by 15, 76,600. This is average profits. Now next step, normal profits. Normal profits are normal capital employed into normal rate of return. You all can see here capital employed 6,50,000, normal rate of return we discussed 8% plus 2%, 10%. So 6,50,000 into 10%, that is 65,000. Then super profits, average future maintainable profits 76,600. Okay, average future maintainable profits 76,600 minus normal profits 65,000. 76,600 minus 65,000, 11,600. 76,600 minus 65,000, that is 11,600. And goodwill, what is the formula we discussed? Goodwill will be equal to super profits upon normal rate of return into 100. So super profits we got 11,600 divided by normal rate of return is 10% into 100, means 1,16,000. So option A. I hope everyone is clear with this. Now after this you all must be able to try these questions on your own. Which questions? 2018's question 11 you try on your own. Then 2019's question 13, 2020's question 9 and 14, and 2023's question 20. All these questions you all try on your own. Okay. Now next question is based on closing capital employed. How to find closing capital employed? 3 questions are there. 2023's question 21 I am doing right now. The other 2 questions you'll try on your own. So 2023's question number 21. Let us see that. From the following, ascertain the amount of closing capital employed for valuation of goodwill. Now, land 5 lakhs, building 9 lakhs, trade creditors, these are assets. There is a liability. Plant and machinery is an asset. Furniture is an asset. Cash on hand is an asset. Land was revalued at 6 lakhs. So instead of 5 lakhs, we will take 6 lakhs. 40% of amount invested in building is treated as non-trading assets. Non-trading assets are excluded from capital employed, because capital employed means the capital employed, used in our own business. Now here non-trading assets means we have invested this money outside our business. So 40% amount of this building we will exclude, means we will include only 60% amount, which is trading assets. Okay, 40% is non-trading. So remaining 60% only we have to include. Now how do we find capital employed? By net asset method. Total all the assets minus external liability. So first we'll take all the assets. Land, which is instead of 5 lakhs we'll take 6 lakhs revalued amount. Okay. I repeat, instead of 5 lakhs we have to take this last amount, which is 6 lakhs. Then building, but we have to include only trading part. Non-trading is not to be included. So we'll take 9 lakhs, 60% amount, which is 5,40,000. Then assets have plant and machinery, which is 6 lakhs. Then cash on hand, which is 50,000. Okay, that's it. Any other asset given? No. So if you total all the assets, 6, 11, 17, 90, 17 lakh 90,000. From that we have to minus liabilities, which is creditors. They are 2,50,000. So remaining will be 15,40,000. This is your closing capital employed. Okay, 15,40,000. 6 lakhs plus 5,40,000 plus plant and machinery 6 lakhs plus furniture we forgot. Oh, I'm sorry. Plus furniture will be equal to 1,50,000. Okay, so total will come to plus 50,000 cash on hand. So total will come to 1790 plus 150, 19,40,000. Now 19,40,000 minus this 2,50,000. So that comes to 16,90,000. Okay, capital employed closing will be 16,90,000. That is option A. I hope everyone is clear with that. So similar questions of closing capital employed you all will try on your own. Which ones will you try on your own? 2017's question 22 and 2020's question number 11. These two questions you all try on your. Now, normal rate of return. So again, how to find normal rate of return? One question 22, I am doing it right now of 23. Two questions you all will try on your own. Look at 2023's question number 22. In a particular business, rate of return is 9.5% and risk, business and finance, is 1.5%. We have done it in one of the questions earlier. Normal rate of return will be the addition of the two. Okay, normal, your business return is 9.5, but your business has more risk. So there is an extra return which your investors will expect, that is 1.5. So that will be equal to 11%. Okay, normal calculation, 11%. So more questions are there. Okay, jackpot for you people if such a question comes. This question 12 you all try on your own, 2020, and 2018's question 23 you all try on your own. Now, question 13 is on value of fixed assets to be shown in balance sheet. This is from Unit 1 Company Final Accounts. So, after deducting the depreciation, what value of any fixed asset will appear in the balance sheet? I'll be solving 2018's question number 22 and then 2017's question 29 and 23's 24 you can try on your own. So, I am solving a bit complicated one. Okay, look at this question number 22. This is 2018's question number 22. See, balance sheet, balance on 1/4/16, beginning of the year, opening balance is given to you. Building and cost 6 lakhs. Now, cost is given to you. That means they will be giving you provision for depreciation. Either they will give you WDV or they'll give you cost. If it is WDV, then they will not give you provision for depreciation. If it is cost, then they will also give you provision for depreciation, and we have to find the WDV as cost minus provision for depreciation. 6 lakhs. Furniture also cost is given 2 lakhs, and as you can see and as I said to you, they have given you provision for depreciation. On building is 95,100 and on furniture is 19,000. I repeat, because they have given you cost, they have also given you provision for depreciation. How will we find WDV? Cost minus provision for depreciation. If they give you WDV directly, then they will not give you provision for depreciation. Provide for depreciation under, now we have to use which method? Reducing balance method. Company Final Accounts permits, as per the Schedule 3 of Companies Act 2013, we are supposed to use reducing balance method only. So straight line method they will never give you. Okay, if they give you straight line method, then you have to calculate depreciation on cost price, if at all MS University gives in exams. But Schedule 3 of Companies Act 2013 allows only reducing balance method. Now the rate is 9.5% on building and 25.8% on furniture. So the balance of the assets after depreciation would be how much? This is what we have to find. So let's find it for building, and you all can try on your own for furniture also, and then you can fast forward and see the answer. Okay, first I'm doing it for building. Now what is the cost of building? 6 lakhs. You all can see in the above information. Okay, 6 lakhs. From that, as I said, we'll subtract provision for depreciation. That is 95,100 on building. 6 lakhs minus 95,100 will be 5,04,900. That will be the WDV. So as I said to you, if they directly give you WDV, then they will not give you what? Provision for depreciation. Okay. Now from this we have to subtract depreciation. And depreciation on building is given at the rate of 9.5%. So 5,04,500 into 9.5%. This is what you have to do. Okay. 5,04,900 into 9.5%. That comes to 47,965.5. We'll round it off to 47,966. And if you subtract that, then the remaining will be 456,934. Okay, this is the balance that will appear in the balance sheet. Now 456,934 means obviously option A is your answer. In exams you can play this trick also. In only one option you get 456,934, so obviously the option will be one only. However, there is one option, none of these. So if furniture's different answer comes, then none of these may also go. Okay, let's try for furniture over here on the right side. Now the cost of furniture, all of you can see here, is 2 lakhs. Provision for depreciation on furniture is 19,000. So 2 lakhs minus 19,000 will be 1,81,000 WDV. Now rate of depreciation is 25.81%. So on 1,81,000 we will do multiplication with 25.89%. Okay, 1,81,000 into 25.89%. 46861. 46860.9. So we'll round it off to 46861. And if you subtract that, remaining will be 1,34,139. So option 1. Okay, this is how we have to find it. Now similar two questions you all can try on your own, which is question number 29 of 2017 exams and 24 of 2023. Okay, the MCQ materials PDF is there in the description box. From there you download it, and then those MCQs and this summary table is also available in that. So both the things you download from the description box, and then from that you can solve the other questions on your own. Now capital employed from normal profit we have to find. So we'll be solving question 29 of 2023. Look at it. 2023's question 29. If normal profit is 90,000 and return on capital employed is 10%, then find out the amount of average capital employed. Now, what is the formula of normal profit? The formula of normal profit is average capital employed into normal rate of return. Okay. Now here normal profit is given to you as 90,000. Average capital employed is what we have to find. And it is given to you normal rate of return is 10%, means 10 upon 100. If you bring 100 on the other side, it will get multiplied. If you bring 10 on the other side, it will get divided. So what will be your average capital employed? That will be equal to 90,000 into 100 on the other side gets multiplied, and 10 on the other side gets divided, means 9 lakhs. So option B. Okay. So how to find normal profit from, capital employed from the normal profit? This can be asked in exams, very simple and scoring, right? Then next is forfeiture amount transferred to capital reserve. Now this is again from unit 1, company final accounts. Okay. one of the adjustments you always come across where shares are forfeited and you're required to find what amount will be transferred to capital reserve. I'll be giving you shortcut method. I repeat, I'll be giving you shortcut method without passing the three journal entries: forfeiture, reissue, and then profit transfer to capital reserve. Directly, how will you find the profit to be transferred to capital reserve? From MCQ point of view, this shortcut is very important. So very smartly, you can solve the question in less time. 2020's question number 10 we take up in the class, in the lecture, not in the class, lecture. And then you'll try the other questions on your own. Look at it. In the books of X Limited, the equity share capital on 1/4/19 stood at rupees 9,60,000. That is 80,000 equity shares fully paid. So 80,000 into 10, 8 lakhs. And 20,000 equity shares, 8 paid up. So 20,000 into 8, 1,60,000. 8 lakhs plus 1,60,000, 9,60,000. This is how you get that. The directors made a call of rupees 2 per share on 1st October 19. Now this might be the final call they've paid. They've asked from the shareholders. One shareholder could not pay the call on 5,000 shares and his shares were forfeited and reissued at rupees 4 per share as fully paid on 1st December 19. Amount to be transferred to capital reserve. This is what we have to find is how much. Now, what you will do here is, okay, smart trick. Whatever amount is paid by the shareholder, that is amount forfeited. From that you minus discount and then you multiply it with number of shares reissued. I am writing it here. See in shortcut how will you calculate it. Amount paid by the shareholder, that is the amount forfeited. From that you subtract the discount which we have given on reissue of shares, and whatever answer you get, that you multiply with number of shares, but only number of shares which are reissued. You'll directly get the amount of profit to be transferred to capital reserve. Over here you can see what is the amount paid by the shareholder. 8 rupees. Okay, 2 rupees was called which he did not pay. 2 rupees final call after calling 8 rupees. Okay, after 8 rupees on 1st October 2019, further call of 2 was asked which the shareholder did not pay. Means he has paid only 8 rupees. Now, the shares are reissued at 4 rupees. Means discount is 6. 10 minus 4. You are reissuing the shares at 4 rupees. Means what is the discount? 6. That 6 you subtract from this 8. So what will remain? 2 rupees. Whatever is this answer, 2 rupees, you multiply with number of shares reissued. Here we forfeited 5,000 shares and reissued all 5,000 shares. You all can see here forfeited also 5,000, reissued also 5,000. So simply multiply this with 5,000. That will be equal to 2 into 5,000, 10,000. So this is your answer, 10,000. Okay, this is asked several times in exams and it is very simple in scoring. You remember this formula: amount paid minus discount, whatever answer you get, multiply with number of shares reissued, not forfeited. It might be possible that they give you 5,000 shares forfeited, 3,000 shares reissued. Then you'll not multiply with 5,000, you'll multiply with 3,000. This is how you'll work out the profit on reissue of shares. Okay. Now similar 2 questions you all can try on your own. Which 2? You can try with, okay, 1 question only. 2018's question number 18. 2018 question number 18. You all try on your own. It is similar question. Okay. Now purchase amount to be calculated from cost of materials consumed. So I am solving 2020's question number 16. Okay. I am solving 2020's question number 16. Look at that. If cost of material consumed is 90,000, opening stock is 5,000, closing stock is 6,000, then the amount of purchase. Now see, all of you understand this. How do you find cost of material consumed? Opening stock plus purchases minus closing stock. And what answer we get is cost of material consumed. Whatever answer we get is cost of material consumed. Now we have to go reverse, because cost of material consumed is given as 90,000. Answer is given as 90,000. And opening stock is also given as 5,000. So opening stock will write 5,000. And closing stock is also given to you as 6,000. So now you go reverse. Reverse, what will you do? Minus will become plus and plus will become minus. So you do 90,000 plus 6,000 minus 5,000. Okay, 90 plus 6, 96 minus 5, 91,000. What would be the amount of this purchases? 91,000. And you can cross check. 5,000 plus 91, 96. 96,000 minus 6,000, 90,000. You have to go reverse. What you do minus, now you'll do plus. What you do plus, now you'll do minus. Okay, so answer will be 91,000. Now similar other question you all can try on your own. Which one is that? This one. Question 4 of 2018 exams. Okay, question 4 of 2018 exams, you all try to find purchase on your own. Now after this, all the questions 17 to 23 are only 1-1. So there is no other practice question for you. Just re-practice those questions again. Okay, so 2020's question number 25 will solve based on total revenue. 2020's question number 25. Look at it. Sales of ABC Limited amounted to 42,30,000 while miscellaneous income amounted to 54,000. What will be the total revenue? Just add the two. 42,30,000 plus. Okay, other incomes are 54,000 miscellaneous income. So 42,84,000. So simple. Total revenue is asked. Option B. Okay. Now I think there is some misprinting here. Ignore 600. It must be say 84,000 only. 000. Okay. There is some misprinting over here. And also you all can be asked any other thing. Like you can be asked total expenses also. Then all those expenses, cost of material consumed, direct purchases, change in inventories, employees benefit, finance cost, depreciation, other expenses, you add and you'll get the total expenses. So like total revenue, they can ask you total expenses also. Okay. Then next question is of which type? Proposed dividend and DDT. 2020's question number 26. 2020 question number 26. Beta Limited has an authorized share capital of 5,000 equity shares of 100 each, while issued, subscribed and paid up capital is consisting of 3,500 equity shares of 100 each. The directors propose the following appropriations of profit for current year. Dividend of, make it 12%, not 125, make it 12%. Instead of 5, make it percentage. On equity capital and DDT 20.56%. What will be the proposed dividend and DDT amount? Now, you all remember that proposed dividend we always calculate on paid up capital. Proposed dividend we always calculate on which capital, every one of you? Paid up capital. And DDT you always calculate on proposed dividend. Proposed dividend on paid up capital and dividend distribution tax on proposed dividend. Okay. So what will be the amount of proposed dividend first of all? What is the paid up capital? 3,500 shares into 100 each. So paid up capital is 3,500 equity shares into 100. That is equal to 3,50,000. On that, the proposed dividend is 12%. So 3,50,000 into 12%. That comes to 42,000. Okay. And then DDT. What did I say about dividend distribution tax? That you count on proposed dividend. So on 42,000, you will count 20.56%. 42,000 into 20.56%. That is 8635.2. In short, 8635. So these are the two answers. 42,000 and 8635. So remember this. Proposed dividend on paid up capital and DDT, dividend distribution tax on proposed dividend. Okay. Then next variety of question is which one? Adjusted profits. This is goodwill's question. How to find adjusted profits. Okay. 2019 question 2 has been asked. So let us see that. How to find adjusted profits after abnormal profits, gains. We have done few questions of this kind in earlier MCQs also. 2019's question number 2. Calculate adjusted profits for the year 17 to 18 from the following details. Profit before tax is given 1,50,000. Now closing stock was undervalued by rupees 10,000. We'll see what is to be done with this in 17-18. And non-recurring income. Okay, non-recurring income amounted to 4,500. Now non-recurring income means you are not going to earn that income again and again. So you have to remove that. If you remove the income, profits will decrease. So this amount for sure we have to minus. Okay, if you remove the income from the profits, profits will decrease. Now what we have to do with undervaluation of closing stock, you all remember this. Whenever they ask you opening stock overvaluation, undervaluation, closing stock overvaluation, undervaluation, you always make a rough trading account to understand the concept. Okay, you can put rough figures, like here it is undervalued by 10,000. So you can take rough figures. Suppose sales is, let us say, 10 lakh rupees, and purchase is, let us say, 8 lakh rupees, and closing stock is, let us say, 1 lakh rupees. Okay, now this is the existing. So 10 plus 1, 11. 11 minus 8, 3 lakhs. Our gross profit right now is 3 lakhs. This is the actual gross profit. Now what has happened? We have done undervaluation of closing stock by 10,000. Means instead of 1 lakh, undervaluation of 10,000 means we have taken 90,000. Now what will happen if you take 90,000? 10 lakh plus 90,000, 10 lakh 90,000. 10 lakh 90,000 minus 3 lakhs, minus 8 lakhs, 2 lakh 90,000. This is what we have taken. This is what we should have taken. Means actually is 3 lakhs. We have taken 290. So what will happen? The profit is increasing by 10,000. So this 10,000 we have to plus in the profits. Okay. So anytime they ask you opening stock, closing stock, overvaluation, undervaluation, you make this rough trading account. Then your concept will be completely clear that you have to add that amount or you have to subtract that amount. Here, if you compare this, you all can see that we have taken 2,90,000 because we have undervalued the stock. Whereas actual gross profit is 3 lakhs. Means if we bring the stock to the actual value, then our profit was supposed to be 3 lakhs. So we have to increase the profit by 10,000. So what would be your adjusted profits? Adjusted profits will be equal to, given profits are 1,50,000. In that we have to plus this undervaluation of stock 10,000, and we have to minus this non-recurring income of 4,500. So 1,50,000 plus 10, 160, minus 4,500, 1,55,500. Okay, and then what is the tax rate given to you? 30.9%. So now 155,500 into will multiply tax, will minus the tax. What is the tax rate? 30.9%. So do it. 1,55,500 into 30.9%. That is 48,049.5. So 050. If you subtract that, then what will remain? 107,450. So after tax will be your adjusted profits 107,450. Okay. So this undervaluation of stock, overvaluation of stock is actually very typical, critical. You every time will get confused. Should be plus or should be minus? The best thing, make a rough trading account with arbitrary, random, imaginary figures, and you work out should you plus or should you minus. Okay. The next question is after 2019, question 2, 2018's question number 7, where normal profits calculation is to be done from goodwill. 2018's question number 7. Look at it. Find out the normal profit if goodwill as per 5 years purchase of super profit amounted to 25 lakhs. Goodwill's amount is already given 25 lakhs. And average future maintainable profit is also given 6 lakhs. Now this is a reverse question. Normal profit we have to obtain. So first you apply the formula of goodwill is already given as per super profits. Okay, goodwill is already given. Average future maintainable profits are also given. So first we find super profits. We go reverse. How do you find goodwill by super profits method? The formula is super profits into number of years purchase. Now goodwill is given as 25 lakhs. Super profits we have to find, and number of years purchase is given 5 years. So super profits will be equal to, if you bring 5 here, it will get divided. 25 lakhs divided by 5, that is 5 lakhs. Super profits we obtained. Now you are going reverse. Apply super profits formula. Super profit equals to average future maintainable profits minus normal profits. Super profits, we obtained 5 lakhs. Average future maintainable profits are given as 6 lakhs. And normal profit is what we have to find. So bring minus normal profit on the left side will become plus, 5 lakhs on the right side will become minus. Means normal profits will be equal to 6 lakhs minus 5 lakhs. That is 1 lakh. Okay, option C will be your answer. That is 1 lakh. So this way reverse questions can be asked in exams where goodwill is already given. Going reverse, you have to find the other values. Then after that, you have profit and loss balance to be carried forward to balance sheet. That is 2017's question number 2. Let's see that. 2017's question number 2. To find the amount of profit to be carried forward to balance sheet, we have to make statement of retained earnings. Okay. See what is given to you. Find out the balance of profit and loss of Sunflower Limited to be taken to balance sheet from the following details. Now profit and loss on 1/4/15/28/500 is the opening profit and loss balance. Okay. Then profit for the year 15 to 16 is current year's profit after tax 131840. Then preference dividend we have to minus, equity dividend we have to minus, DDT on dividend we have to minus as per the old amounts. Now all these amounts we show in the notes, contingent liabilities. So your current year's answer would be differing from the past year's answers. Earlier all these amounts we used to show in statement of retained earnings, but I will tell you this is the exam 2017's question. So your answer will be different. If they ask you in the current year, then you have to ignore the dividends because dividends and all appear, okay, preference dividend and equity dividend and all appear in the contingent liabilities. Okay. However, if they are given in your trial balance, means the amount is already paid, then you will do what we have been doing in past years, then you'll minus them. Okay, I'll explain you. First we start with opening profit and loss account, which is given as 28,500. Then profit for the current year we will add. Profit after tax of the current year is 131,840. So 28,500 plus 131,840, 160,340. From that we will minus all the appropriations, transfer to reserves, dividends, etc. Here preference dividend will minus, that is 6,000. I'm writing in bracket because you have to minus it. Then equity dividend will minus, which is 24,000, again in bracket. And DDT, that will calculate on 30,000. 30,000 into 20.358 percentage. Okay, total dividend 30,000, 6,000 plus 24,000, 30,000 into 20.358%, 6107.4 minus 6107. These three amounts if we subtract, 160,340 minus 6,000 minus 24,000 minus 6107, what is remaining? 124,233. So this amount will be taken to balance sheet. Okay, 124,233. Now in case if they ask you in the current year and all these are proposed, I repeat proposed, if they mention that all these are proposed but not paid, then these three amounts you will not subtract. This itself 160,340 will become your answer to be carried forward to balance sheet. If at all in transfer to general reserve etc is given, you'll minus that, but you won't subtract the amount of proposed preference dividend, equity dividend and DDT. Any amount of dividend and DDT paid, I repeat paid, which comes in trial balance will be subtracted, but proposed, recommended, proposed or recommended, you don't have to subtract. It appears as a contingent liability. Okay, so keep that in mind. Going further, how to find profit after tax, 2017's question number 9. 2017's question number 9. Let's see. Find out profit after tax from the following. Profit before interest and tax is 16 lakhs. 12% preference share capital of rupees 100 each is rupees 20 lakhs. So that is dividend. Ignore it. In profit after tax, The dividend of preference is not to be taken into consideration. It comes in statement of retained earnings. Okay. 10% debentures, consider it. Interest we have to consider. 10% term loan, consider it. Interest we have to consider. Tax rate, consider it. We have to consider. What you have to simply ignore is preference share capital and its dividend. Okay, rest we'll all consider. So how will you find it? Profit before interest and tax is 16 lakhs. Dividend comes in statement of retained earnings. From profit after tax, we minus it. And that too if it is paid, not proposed, as I discussed right now. So dividend will not be included in calculation of profit after tax. From that we'll minus interest. Now interest on debentures is how much? 12 lakhs into 10%. 1,20,000. Okay, 12 lakhs into 10%. 1,20,000. And term loan from bank is how much? 14 lakhs into 10%. On term loan it is 14 lakhs into 10%. Again, that is 1,40,000. These two amounts we have to subtract. PBIT minus interest. So 16 lakhs minus 1,20,000 minus 1,40,000. 13,40,000 will be profit before tax. From that we will minus tax, which is at the rate of 30%. So 13,40,000 into 30%. Tax will be 4,02,000. If you minus that, 9,38,000 will be profit after tax. Option C. Ignore the dividend. Okay, for profit after tax, dividend is not to be taken in consideration. And last variety is again 2017 only. I'm not going to the summary again. 2017's question number 14. Look at it. Opening balance of raw material is given as 50,000. Finished goods is 75,000. Purchase of raw material is 2,50,000. Carriage inward is 15,000. Closing stock of raw material is 70,000. And finished goods is 85,000. Now what is asked is what will be the cost of raw material consumed? Because you are asked cost of raw material consumed, you ignore finished goods. You ignore finished goods. Means finished goods is not to be taken in consideration. Okay. This thing you have to ignore. Not to be taken in consideration. Now how will you find the cost of material consumed? Opening stock of raw material, that is 50,000, plus purchase of raw material, that is 2,50,000, plus expenses, carriage inward we will add, that is 15,000, minus closing stock of raw material, that is 70,000 we will subtract. So 50,000 plus 2,50,000, 3 lakhs, plus 15,000, 3,15,000, minus 70,000, 2,45,000 would be cost of raw material consumed. Okay, this is raw material consumed, 2,45,000. So all the questions have been covered, right? You all practice these red circled questions in the summary on your own. And as I said, the link to download this summary as well as the link to download the entire MCQ material, which includes theory questions also. As I said, out of 30 questions, 14 to 15 will be practical based. Remaining 15 to 16 questions will be theoretical based. So both the types of questions, entire MCQ material you download from the link given below, and then you all can take out a printout or directly from the soft copy, practice the remaining questions on your own. If you practice this thoroughly well, 15 marks are guaranteed in your exams. इसके बाहर कुछ आएगा नहीं. So guys, wishing you very best, all the best for your upcoming mid-sem exams. Take care. Bye.